Hello, everyone. Thank you for joining me today. This is week 7 of the macro overview series, and before I begin, I'd just like to inform you all that this will be the last macro overview series video for this year, and we will probably be resuming our videos at the end of January. And this is because all of us have exams coming up soon, and we also have a lot of coursework to work on, which is due soon. So, yeah. Uh, we will be resuming our videos at the end of January. And so yeah, that was the announcement for today. And now I would like to start off with today's video and um, begin with Americas first. So first, I'd like to talk about the economic situation in US and how the economic growth was stronger than expected in the third quarter. So this growth has been stronger than expected despite the continuous increases in the interest rates by the Federal Reserve, and the Federal Reserve has been increasing the interest rates in order to combat high inflation. In terms of strong economic growth, this there are several factors contributing to it. So one of them is strong consumer spending, and one factor which is contributing to strong consumer spending is that people did make savings during the lockdown period during the pandemic. Another factor is continued recovery of industries such as leisure and hospitality, and this is what has kept the labor market strong. Uh, uh, in terms of statistics, GDP has increased at an annual rate of about 3% from July to September, and there are currently 10 million job openings and only 6 million unemployed Americans still seeking work, which is still a lot, but it has reduced significantly. Um, Although job quit levels and staff turnover levels are high, they are expected to ease gradually, according to an economist at Wells Fargo, and this will reflect an increase in the confidence of workers looking for a new job. I would now like to move on to the economic situation in Brazil and talk about how the central bank has decided to keep interest rates at a steady level, and this stressing fiscal concerns. So Brazil's central bank has decided to keep interest rates at a level which they have been keeping it at, which is 13.75%, and this is amid fears that there will be an injection of government social spending. There are fears that the spending plan will create uncertainty for consumers, and this is because the plan will require a waiver from their current multi-billion welfare spending cap. So overall, the Central Bank of Brazil and the government needs to be in more alignment on their goals, because the government has currently implemented an expansionary fiscal policy with the aim of not going beyond the target inflation rate of 3%. And this contradicts the tightening of monetary policy by the central bank. And this is what has actually created uncertainty to an economy which is already volatile. Lastly, I would like to come back to the economic situation in US and talk about the growth in corporate bonds. So investors have poured about $15.7 billion into US corporate bonds, and this is split between two things. Around $8.6 billion of investment is into bonds which are rated at least triple B, and the rest, which is $7.1 billion, is invested into lower rated debt. This is basically the market's response to inflation data, which is improving. So many investors had been highly concerned with rising CPI, but like I said, inflation is improving, so the concerns of investors are reducing. However, recession is still a possibility, but currently, the Federal Reserve's measures are seeing some success in avoiding such an event. Um, Thank you for watching this brief summary video of what's been going on in the Americas region this past week. Uh, Please do follow our social media pages as shown on the screen above. And like I said at the starting of this video, I will now see you all at the end of January.